So, when you take a look at stock futures, though, you're not looking at much of a move coming in there, though. Because when you take a look at futures tied to the Dow Jones, you're looking at a dip coming in of about 0.2% there. S&P 500 futures downtick of about 0.2% coming in there as well. And Nasdaq 100 futures also pulled back about 0.3%. Now on Monday, of course, the Dow broke with the broader market and reached a new intraday high before pulling back. That is, still the 30 stock index did hold on to enough of its gain to cement a fresh record close as well. So that's the kind of move that we saw coming in for Dow. Now, meanwhile, a slide in tech stocks is something that we saw because there was a gain in less favored segments, the likes of energy, that signal that investors might be rotating out of preferred segments that have been the market's key driver for the past 1 year, in fact. Now, stocks are trying to find a stable footing after a brutal start to the month as well. Investors have grown more optimistic after Federal Reserve Chair Jerome Powell's commentary coming in that the central bank's next move will be to cut benchmark interest rates. Powell, of course, did not specify when, but he did indicate that there is that plan coming in when it comes to cutting interest rates. Now, traders are unanimously also forecasting a rate cut at the central bank's September 17 to 18 policy meeting of at least 25 basis points. So that, of course, is something the market is keeping a very close eye on. So that's a kind of handover that we have from Wall Street. Now that you look at it, investors, of course, will be passing through fresh quarterly earnings from retailer Nordstrom as well after the closing bell, and that's also something important to keep an eye on. Of course, there's Nvidia that has become a key bellwether for stocks, and that is the one that saw a cut coming in of about 2%. So that was also important to note. Now, of course, when you take a look at European markets, then let's shift focus. Take a look at European markets closed in mixed territory yesterday. So whether you look at a DAX, you're looking at a cut coming in of about 0.1% coming in for DAX. When you look at France's CAC also, that is the one that bucked the trend, closed up. But regardless, you're seeing a mixed close coming in when it comes to the Europe market, Cheryl.
Absolutely, but if you look at what the commodity markets have done, the picture was pretty stark because we've been seeing the crude prices actually decline over a past couple of trading sessions, but that wasn't the picture yesterday. Yesterday, in fact, you saw the crude market see a sharp spike on an intraday trading basis, and one of the reasons why the crude market actually saw the spike was the fact that the Libya has said the output cuts. They will go ahead and cut their output as in their production as well as export, and that kind of added to the Middle East supply concerns coming in for the crude markets. On back of that, you saw a sharp spike in the crude oil prices, with the Brent crude seeing a spike about 2.8%. You had WTI crude, or for the matter of fact, what we call it as NYMEX crude, seeing a jump about 3.1% or so. And not just that, you saw some sort of a trickle effect on the commodities. You saw US copper actually seeing an uptick because of the demand rebound in China. You saw gold actually see an uptick of about 0.3% on back of the elevated risk of geopolitical risk, as well as the US rate cut optimism. Talking about the dollar index, then that saw a firm move coming in, and also you had the US 10-year treasury yields that actually saw a jump about 2 basis points coming in at around 3.82%. So if you're looking at the way how we are actually dealing with the global markets, the picture is pretty stark when you compare it to yesterday, be it the US market close, be it the commodity, or for the matter of fact, the way how the Asia screen also is looking like at this point in time. Actually, Shreyansi, we are seeing a sea of red in Asia.
If you like this video, then like, share and subscribe to ET Now.